My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to this My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Now, huge things going on in the market. The metals are collapsing. Silver is down 15%. This is all on the back of not only being extremely oversold, and we could see this the last few days intraday. We got some big flushes in silver, even though it came back decently. But the kicker here was the president announcing Kevin Warsh would be his nomination to replace Jerome Powell on the Federal Reserve. Now, you might say, well, why is that a big deal? Well, it's a big deal because he's not as dovish as the market had anticipated. He's not a sure bet for always cutting rates when the president asks him to. And by that, it takes one of the key main thesis factors away from the precious metal trade. If you basically think about this, is that the precious metal trade is obviously debt related, right? US has massive debt, global debt. It also has many other factors. But one of the key factors was that it was the degradation of the Federal Reserve, the Federal Reserve losing its independence, the Federal Reserve just backing down and printing money ad nauseum. And now today, that's not as much of a sure bet. And that's why we're seeing this correction in the metals. So let's take a look at silver real quick. Look at that daily candle today, down 15%, a little bit off of its lows, just on a purely technical short-term basis. See this kind of flat top right here? And look at where basically silver put in the low today, right? Right there, came down, tagged that level. And you can see all this sideways chop before we had that latest run. Now, in reality, silver's only reversing basically the last 4 to 5 trading days of upside. But for me as a technician, this trend line is going to be the one I watch, the $88 level. That's the longer term trend going back to November. Notice again how over and over again, we kind of tagged this level and we tagged it again and we went to it again and again. And so the idea is that if we come down there, that's going to be your key point. I would personally not go near silver until maybe it touches that. And then I might dabble as a day trade, maybe a quick swing trade, certainly not a long-term investment just yet. As again, if this level breaks, that's where things get really nasty. That's where we could see that bigger correction down to $75 or even below on silver. But right now, the only thing I'm watching here on silver is the $88 level. And again, folks, this is the kicker. It's the nomination of Kevin Warsh as the Fed chairman to the Federal Reserve, right? The leader, the new leader of the Federal Reserve. Couple thoughts of mine. Does this make it less likely? And maybe this is part of the reason why President Trump picked someone who wasn't fully a hardcore dove willing to cut and just print money ad nauseum. I think number one, this may make it possible for Jerome Powell to feel like he doesn't have to stay on the board, right? So, Jerome Powell's tenure goes till 2028, just not as the chairman. And so he'd still be on the Federal Reserve. So the question is, okay, does this mean that he might not stay on as a governor, essentially? The other thing that I was thinking about, and I think this is very smart of the president in this situation, is that we have an issue with our debt. If you put a stooge in the chairmanship of the Federal Reserve, the likelihood is our borrowing costs would go higher, right? Because people are going to be like, hey, I'm never going to get my money back. They're just going to print it and it's going to be worth so little. So therefore, I'm going to have to get compensated with a higher interest rate by buying long bonds, right? The long bond. And so by doing this, he probably helps keep the borrowing costs down, which is kind of counterintuitive, right? Because normally you'd be like, well, you need a dove to cut rates so that rates go down. No. Long end rates, the 10, the 20, the 30 year, that's controlled by the market. And the market will say where the rates are based on how they feel about the Federal Reserve independence and the fiscal situation of the US. Now, listen, I'm going to be honest with you guys. For me, this is a small positive. Do I think it changes the long-term trajectory of where the U.S. is headed? No. Do I think gold and silver maybe pull back even more, but eventually make new all-time highs? Yes. but it's just a near-term correction that honestly was needed, right? It was needed. All right, gold, we'll look at gold real quick. Gold taking a dump. If you look at where gold traded yesterday, and of course we'll get into stocks, guys, and we'll get even into Bitcoin, which is just a sad, sad scenario right now. But basically, gold from yesterday's highs got down as much as about 12%. And same thing here. Where would that first technical level be? I would do this trend line right here on gold. Look at how beautifully this is at this low. It starts back in August of 2025, connects through these lows here in November of 2025, and then late December, early January. This would be that first big level right around 4,600 on spot gold. All right, now let's touch base on the S&P futures. All right, overnight we were trading lower. Remember, yesterday we had that nasty sell-off, right? This sell-off at the open I thought was so interesting and telling because the sell-off was so dramatic in the S&P and the NASDAQ. NASDAQ was down like 2.5% to 3% at one point that it actually took the metals down. The metals collapsed intraday, and Bitcoin, like literally every asset. Didn't matter if it was a safe haven asset. And by the way, what does that tell us? It tells us that every asset that is inflated right now is not a safe haven asset. It is a risk asset. And I know that's weird to think about, but it basically tells you that too much money has gone into them right now and they have to be digested. That money has to be digested. But ultimately, once we started to hear about Kevin Warsh, the markets actually rallied back a little bit. We are still setting up for a small negative open today. And again, I think a lot of this too is the earnings, right? So earnings generally have been good. But I think the Microsoft move yesterday, I mean, Microsoft was down 10% yesterday. That's a $3.5 trillion company down 10%. Intraday, that stock was down as much as 13 to 15%. These type of drops in these mega caps, they make pension funds, they make 401k fund managers, they make a lot of managers of money, including retail, very nervous. When you have a stock that is supposed to be the behemoth, that is supposed to be one of the safest long-term investments, and it can drop 10 to 15% in a day, that's telling you something. That's telling you there's a lot of hot air in not just most stocks, but even the mega cap stocks. And sure enough, folks, again, we can take a look at Microsoft. This was the drop yesterday on Microsoft. At one point, trading down to 420, closed around 433. It's basically trading flat this morning. But again, that's a big move. And by the way, I still think over the next few months, Microsoft is going lower into this 400 to 390 area. Once it gets down there, I actually like it as a buyable opportunity. Now, it doesn't mean it can't bounce for a few days or even retrace, but this level with the technicals, that's the buy level for me as a hardcore swing trading opportunity. All right, let's flip back here. I want to go to the S&P. Let's just check in on our daily S&P chart. So look at by the way, look at the sell-off on the S&P yesterday, all the way down here. And then it recovered in that second half of the day to basically only be down a 0.1%. But more importantly, here's your wedge pattern that you broke below, and it is still holding. And so, like I said all week long, I said, guys, this is the level to watch. If we can get above this, we're in price discovery mode on the S&P, and we could go much, much higher. Just like, I mean, look at silver, right? I mean, look at the runs in those, obviously, before the collapses. But as long as we stay below this, odds favor an eventual rollover. Like if you look at a chart like this, right? And again, excuse my poor drawing, but if a chart is like this, squeezing and it breaks and it retraces, more often than not, once it breaks below there, that's your resulting move. Now, it doesn't guarantee it because there's no such thing as guarantees in trading and investing. It's only probability based, meaning it is the more likely outcome. Same thing for the QQQ. Great trend line on the Qs. We broke it. We retraced. Look at how 2 days ago we were above the white trend line, but by the end of the day, we closed below it and then back down yesterday. We'll see where we go today on the NASDAQ on this Friday. All right. Now, one of the things that I thought to myself, I thought when it was announced Kevin Warsh would be the nomination. So number one, chances are he'll get through, right? I mean, there were threats from both Republicans and obviously Democrats that if the DOJ investigation against Powell wasn't dropped, they weren't going to confirm anyone. But I think it'll get worked out. I think this pick is going to be popular with pretty much all sides. And I do think Kevin Warsh is probably our next Fed chairman. Now, in that thought process, it should strengthen the US dollar, right? Because again, this gives more confidence to the US financial system in the near term. Let's take a look at the dollar and see what the dollar is doing. The dollar is moving up, so that is correct. Now, the big question is, I mean, this is not a big move in the dollar. The big thing that I'll be watching here is number one, we came down like this. Are we going to make a bear flag and eventually break lower? And that's what I think will ultimately happen, regardless of Kevin Warsh. And my guess is he's going to be more dovish than people anticipate. If you look at his track record, he's actually been more hawkish. But let's be honest, he wouldn't have gotten the nomination if he didn't tell the president he was willing to cut rates essentially when needed or when instructed to. So I think, again, it's a fine line. The markets like it right now, but I also think the president wouldn't have appointed him if he didn't think he could get what he wanted out of him. But either way, the dollar is bouncing. We are still holding this longer zone of support going back to 2008. But my guess, again, is we're going to go kind of like a bear flag. And then I actually think later this year, maybe second half of this year or late first half, we start to break this support. Now, the other thing catching my eye is this. Yields are up today. So you would have thought, to me at least, that, like if we put in essentially a stooge, right? If a stooge, meaning someone that's just a yes man on the Federal Reserve chair side, I would have thought the 10-year yield would have gone spiking higher. All right. Because the idea is other countries and other players buying our debt would have been like, dude, now you got to pay me 6% to buy your 10-year. I mean, I'm not taking the risk unless I get 7% or whatever it may be. But with this pick, you would have thought rates were going down, but rates did not go down. Rates are actually up. Now, they are off of their highs, but we knew we had a breakout here and a retrace, and yields are still up on the 10-year yield. Now, what does this mean? I think I know. I think this means that the market is telling us inflation is on the way up. And listen, I've preached and screamed about this to you guys, how we've gotten these CPI numbers that have shown like minor, like very like lower number readings on inflation. I'm like, guys, look at silver, look at gold, look at nickel, look at aluminum, heck, look at copper, look at live cattle prices. I mean, there is inflation. And by the way, in January, crude oil is now up 15% just for January. That should be reflected somewhat in the CPI data coming in February, which we're almost in February. I think by about the mid-month period, we'll get that CPI number. I think that's why we're seeing yields holding up here on the 10 years, because inflation is likely going to start to tick up here if we get real readings, not fudged readings on these numbers. And look at, by the way, just look at copper. I mean, this is the copper chart. Now, by the way, I think copper topped out yesterday. Look at this beautiful trend line. Look at the Pearson reversal, but look at the down day today. But copper, again, if you look at where copper was going back to basically July of last year, copper was at $4. It's up basically 50%. And then obviously we know what silver's done. I mean, we looked at the silver chart already. The silver just from November gained basically over 100%. You can go to aluminum. You can go to all of these, even oil. I mean, look at oil. It just keeps going higher and higher and higher. And again, all you have to do is to measure, and this is how we can kind of gauge the CPI. It doesn't give us the full view because they throw other factors in there like housing and rents and this type of stuff. But if you go back to where it was trading on December 31st, the close on December 31st, and that's not what I wanted here. I want the measurement here. You can see that on December 31st, it was trading here. And right now it's up 14.5%, 15% if we look at yesterday, 16% at yesterday's highs. But the point being, again, is that yields are likely higher because it's telling us inflation's starting to tick back up. And it makes a lot of sense. If you look at the data, if you look at the commodities, it makes a lot of sense that it would. All right, let's go through a few charts here. Apple reported earnings yesterday after the bell. Initially, it was up, then it went negative. Now it's basically flat to positive. A non-event here. The market's not getting a big catalyst from Apple, at least at this point. All right, now again, yesterday we saw Tesla. Take a look at this, guys. Tesla opened higher on earnings, and look, it broke down. Now listen, it closed below here, and then it recaptured. Closed below, we watch for confirmation. Will this chart confirm a breakdown, right? So remember, just because you close below a technical support is not a breakdown. If that was the case, then there would be a ton more breakdowns than we have. A lot of times they're head fakes. And that's why I use the confirmation signal to basically guide us to where that is a real breakdown. And right now, at least on Tesla, it is a warning sign, but it is not a real breakdown. We would need to see a confirming candle. Right now, Tesla is slated to open higher. We talked about Microsoft already as well. This morning or yesterday after the bell, we got some big earnings from WDC. WDC is up a little bit on earnings, not much here. No trade here. Listen, this chart is ridiculous. This is the daily chart. Look at the weekly. I mean, this is the weekly, guys. And by the way, it doesn't mean it's going to go down. Case in point, look at this chart. Look at the chart on SanDisk. SanDisk was trading at all-time highs yesterday. Look at the weekly on SanDisk. This is the weekly chart on SanDisk, and it's trading at $666 right now. I mean, that is insane. All right. Now, listen, they had great earnings, but I will still come to the table and argue till I'm blue in the face that these numbers for memory, this is a memory chip stock like WDC, like a bunch of these other ones, is that production is kicking online as we speak. And this is probably as good as it gets. Maybe next quarter they can squeeze out another great quarter. They doubled their guidance for earnings to $12 a share. But again, memory chips are not unique. They're not proprietary. All right. These are memory chips that go in our phones. They go in our computers. They go in this. They go in that. And ultimately, we already heard Micron put $24 billion into a Singapore plant that's building it out to make memory chips. Everyone's going to be making memory chips when the margins are this high. And within a year, I think SanDisk is back to a $200 stock. All right. Again, just my personal opinion, but that's watching past cycles happen. Past cycles when it's not proprietary. Now, even with NVIDIA at least has had proprietary technology in their AI chips, but even competition has been coming up. People have been developing equal competition in the chips, and that eventually will obviously hurt the margins in the AI space as well, not just the memory space. But really remarkable move. I mean, any way you cut it, just incredible to see SanDisk up really basically $100+ again after it was already making this move. Now, KLAC, this is another chip stock. It did not perform well. The stock again is dumping after closing yesterday around just under 1,700. It's at 1,650. If we look at the chart, you can see it's had an incredible run. I will not touch this until about 1435. There's a gap fill down there. If it could get there today, folks. I mean, once these things start to collapse because they miss on earnings or they don't show the best guidance or margins start to contract, they will start falling quickly and hard. So be careful. Again, this is where you want to be careful of a falling knife. I don't mind a falling knife when it's at, if a falling knife is all the way down here from this high, I don't mind it, right? I have a double bottom down here. It's beaten down. But when you're at these highs, these are where you got to be careful because it's so overdone. Same thing goes for SanDisk, WDC, STX. We saw that earnings earlier this week. Now, Visa reported earnings. Nothing going on here, guys. This is the daily chart of Visa. It's down fractionally on the day. Now, let's flip over to Bitcoin. Oh, Bitcoin. Oh, Bitcoin. What can you do? So Bitcoin, we knew had broken support a few days ago. It confirmed that support. Yesterday, the markets dropped. Gold dropped, Bitcoin dropped. Gold bounced back. Granted, it didn't overnight, but yesterday it bounced back. The markets bounced back. Bitcoin did not bounce back. Gold dumped more overnight. Bitcoin dumped more overnight. It's been a tough road if you're a Bitcoin investor, right? And listen, even worse if you're in the altcoins. The altcoins, I mean, holy cow, they've just been decimated. But the key is the charts were telling us, right? How long did I sit here, guys, and tell you that this pattern, right, was a bear flag? And then look, it broke, retraced, down it goes. Path of least resistance, right? There's your trend line, bear flag, and it's going down. Now, ultimately, where do I expect this to go? Now, you'll have a little support. We kind of tagged this pivot low right here at around 80,000 and change, but really, I think it's going down here. You're looking at around 70,000-ish, give or take, maybe 72, maybe 68, but right in this vicinity, that's where I would expect major support. Do we have a head and shoulders here? Yes, we do. That's very scary if you're a Bitcoin bull, because if that plays out, you're basically talking about, and that's a horrible neckline. Let me do that better. I apologize. You're basically factoring in, and again, I'm not saying it's going here, but based on the calculation, if you wanted to do this, This, you take the highest point, you drop a plumb line down, and then you extend that out. So wherever we break the neckline, you're talking a $35,000 target. Now, I'm going to start buying ahead of that. I'll probably start inching in over here. But then I'll dollar cost average if it goes down. But I will say this, and I said this yesterday, is that Bitcoin needs to figure itself out because it's not going with gold as a safe haven asset, and it's certainly not going with the stock market when the stock market is at all-time highs. And so what is it? That's the $1,000,000, $1,000,000,000, $1,000,000,000,000 question. We're here to find out. All right, lastly, quickly, guys, again, we touched on oil here. Oil doing okay. Quickly looking at natural gas. Natural gas, last I checked, was hanging in there pretty well. It is moving up today. We'll see if it pushes back up. I really don't have any great bias right now. I do think if it gets up in this range, it probably runs into big resistance. But other than that, for the most part, the key today is the silver and gold drop, the Kevin Warsh nomination. Those are the factors. And then let's see how the markets react. We know the S&P is still below that key level, which makes it vulnerable to downside. And we know the NASDAQ is as well. All right, guys, that's all from me today. You guys go have a great trading day. I'll be trading here at Verified Investing in the live day trading room and hope to see you there. You guys have a good one. Take care.